is a very good, I guess, support area, or we don't know it's going to be support just yet. What makes this a good key level is this right here, right? So this is the PO3, and I'm going to change this to the daily candle, right? So for those who have been following some of my previous videos from about a year ago, you will know that I talk about the ICT accumulation in terms of two phases, phase 1 and phase 2 manipulation. So what that means specifically is, if I kind of draw this here, when price accumulates in the Asian range and we rally down lower like we have here, this here is a daily opening price, right? So this is New York midnight opening price. So I'm just going to write 0, 0, colon, 0, 0, right? This is the New York midnight opening price. This is kind of when the market resets, if you like. Now from here, what we can see is we are significantly below this daily opening price. Notice how we've taken out the Asian range low in the process. So some people call this the ICT Judah swing, some people call this the low of the day. It is basically the low of the day, or you're anticipating it to be the low of the day. This is another confluence, and I think it's very important to understand, right? So our first confluence, we're in discount. Our second confluence, we filled the gap. Our third confluence is that we are below this daily opening price. It's very simple, right? We are significantly below the daily opening price because of this bearish candle over here. That is confluence number 3. Confluence number 4, which kind of ties into the New York midnight opening price, is accumulation and now manipulation. Accumulation is the Asian range, right? This works across Forex, futures, just about anything. If you're trading the New York session specifically, what you want to understand is that the Asian session will accumulate liquidity. The London session and or the New York session will manipulate. And of course, if you're trading the S&P 500, I want to catch the distribution in the New York session. That is basically how I trade, basically, right? Obviously, the other thing is order flow. We're going to get into that. So if this is your accumulation, this here is the Asian range, this is the accumulation. Now, when price kind of rallies below that, what we see here is the manipulation. Now, this manipulation is essentially the low of the day. People call it, Judah swing, whatever you want to call it. But basically, this is AMD. So we have accumulation, we have manipulation, and now from this key level, which I'll just drag over, we want to catch the distribution. So basically, we are looking to catch the expansion of the day, which was, of course, bullish. So why was it bullish again? So we've swept the Asian range low, we've filled the gap over here, we're below the daily opening price here, we're in discount here. We have a lot of things in our advantage to look for a potential, and the key word is potential, long. Why is it not a guaranteed long, right? So the reason why is because we don't know if buyers are going to be in control. Now this is the thing that catches a lot of traders out, and I want to kind of dissect this just from a 5-minute chart, right? So